Shares of Rivian now off just about 3% after the company released its second quarter results, a narrower than expected adjusted loss of $1.08. The company also second quarter revenue coming in better than the street was looking for. Rivian boosting its full year production outlook, yet we're looking at shares under pressure in extended trading. So here to help us make sense of all this, we want to bring in Jordan Levy, Truist Securities equity research analyst. Jordan, it's good to see you here. So it looks like a pretty solid print from Rivian, yet we're looking at shares under pressure in extended trading. What's your first take on these results?
Yeah, it's interesting. I mean, I think that all around the results came in better than expected. We like to see the guidance increase. I think it shows, Rivian's continuing to perform, continuing to gain that momentum. Now, like you said, shares had run pretty well into earnings. So there's potential that there's some sell-off here on, folks who are playing this for an announcement regarding an expansion of their commercial vehicle platform or something of the like. But I think from an execution standpoint, we really saw everything we wanted to see out of them this quarter.
And Jordan, to your point, I know you all put out a research note saying you were forecasting for them to produce 54,000 vehicles for the fiscal year 2023. They did boost their forecast a little less than you expected, but is that any cause for concern at all for you?
No, I don't think so. I think at this point in the game for them, it really comes down to what do the delivery numbers look like and is demand holding up? And we'll get good sense of that, I think, in the upcoming call. But from everything that they've shown us so far with where the revenue numbers came in for the quarter, with where gross margins were and what they were able to do on delivery numbers, it seems like that's holding up pretty well. So I think the focus is really more on that than, a couple percentage points difference on production.
And Jordan, when it comes to production, the company here is citing progress we have seen to date on our production lines, the ramp of our in-house motor line, and the supply chain outlook. Those are the reasons for its revised expectations. How big of a catalyst do you see those production ramps and more insourcing being for Rivian going forward?
Yeah, I think it's critical. Look, there's no doubt this is a really competitive market. You have other EV pure plays they're competing against. You have all of the longstanding OEMs out there that are ramping their EV production. So look, Rivian being able to get their vehicles out to market, be able to do that profitably by boosting efficiencies through Enduro and other initiatives, I think is critical. And really where we are now is the market. I think some of the momentum the stock's gotten recently is they're showing that they can be a longstanding player in this space. And as they continue to do that, I think there's still a lot of momentum they can garner.
And Jordan, given these latest results, are you sticking by your buy rating and that $30 price target on the stock?
That's right. Yeah, I mean, we review all our estimates and whatnot after earnings, but yeah, I would say that the results have been very positive.
So what are you looking for specifically that may change your thesis there after their earnings call?
We want to see commitment to the initiatives that they've laid out. We want to see that it looks like the dual motor configuration that they started to roll out in their passenger vehicle segment is going well. It seems like that has the potential to get them to profitability on that faster than we had initially expected. And so if those can be confirmed, I think that's very positive for where shares can trade.
All right. Jordan Levy, Truist Securities equity research analyst. Thanks so much for joining us today.
Thank you for having me.